Welcome to another weekly stock market update. Today is April 5th, 2020. This week, oil dipped below $20 a barrel, and Trump indicated that he will intervene to help resolve the dispute between the Saudi and the Russian. And that caused the oil to rebound. So is it time to buy the oil? Well, in this video, I will show you the swing trade that I took on the oil after we have analyzed the stock market, reviewed the sentiment and the internals, and also update the gold market and the US dollar. For the S&P in the month of March, it had a swing of more than 944 points. And for the month of February and March, these 2 months, essentially have taken out the S&P gain that it took 14 months to accumulate in just a matter of 2 months. And in April, it did not start off with a positive start either. It essentially continued the downward movement, although it is above this Fibonacci retracement zone, but it is still underneath this long-term trend line here. Looking at the indexes here, you can see that they all had a little bit of a dead cat bounce in the last week and a half, but right now it's still trying to find a base here. And I'm still continuing to monitor the NASDAQ 100 and the NASDAQ Composite to see what it come down and tag this December 2018 low. So on this sentiment chart here, the put call ratio is sitting slightly above 1. On Friday, it closed at 1.013. Now, whenever the put call ratio is above 1, then that indicates that there are a lot of hedges being put on, and the market is basically on a risk-off mode. And whenever it gets below this 0.75, then the tone for the market is bullish, and it is in a risk-on mode. Right now, it is still sitting near 1, so the market is indicating that it is still in a risk-off mode. And the VIX is also indicating that there are still a lot of fear in the market, although that came down substantially from this peak above 80 and closed on Friday at 46.8. But it's still pretty much elevated comparing to the level prior to the sell-off starting in February. It was down below the 20 level, and right now it's sitting at 46.8. So these two sentiment indicators still indicating the market, still telling us to be on the cautious side, and there could be some further downside in the near term. Now let's take a look at the new high, new low. This seems to give us a little bit positive sentiment here on the new high, new low. And if you look at the New York Stock Exchange last Friday, it only finished with 179 more new low than new high, comparing to the extreme where it had minus 2,380. And also in the NASDAQ last Friday, it only had 188 more new low than new high, comparing to the extreme of 2,093. Now let's take a look at the S&P 500 compared to the new high, new low. You can see that back here when the S&P 500 closed with a new low on March 23rd, it closed at 2237.40, and the new high, new low is sitting at minus 771. Versus when it was sitting at minus 2,380, the S&P 500 closed at 2,480.64. So you can see that there is a positive divergence between the new high, new low, and the S&P 500. And this could indicate the market had put in an internal low. What does internal low mean? It means majority of the stock have already put in a bottom, even though the index might not have. This is possible because the index is weighted and it can't be influenced by a few heavily weighted stocks. So now this doesn't mean these stocks that made a bottom can go further down. They can certainly reverse and help push the index to a new low. But if the index make a new low and the new high, new low fails to make a new low, then that could be a confirmation the bottom is in, especially when the new high, new low turn positive. So pay attention to the new high, new low next time when the S&P 500 makes a new low. Now let's turn to the cumulative advanced decline chart. This chart is generated by adding the daily net difference between the number of advancing issues and the declining issue. So if there are more declining issue than the advancing issue, then the difference subtract from the cumulative sum, and vice versa. If the difference is positive, then it is added to the cumulative sum. So what is important from this chart is not the value itself, but the direction. Okay, if you notice here on last Friday, the S&P 500 closed at a higher level than this previous low. And if you notice that the advanced decline actually closed at a lower level than the previous low. So that forms a negative divergence. And what this implies is that be on the lookout for a potential near-term pullback on the S&P 500. And looking at the NASDAQ, new high, new low compared to the NASDAQ 100, it's the same thing similarly to the S&P 500. You see when it made its low, the recent low, the new high, new low is actually much higher than its extreme low when the index actually closed at a higher level. So that also formed a positive divergence similarly to the S&P 500. And the cumulative advanced decline also show a negative divergence, just like the S&P 500. Notice that the NASDAQ 100 closed at a higher low, higher level, above this low here, while the advanced decline actually put in a lower low. So from the sentiment and the internal, the market is telling us that there are still more near-term downside, but many stocks might have seen the low for this cycle. Now let's go take a deeper look at the S&P 500. Before I continue, click the thumbs up if you find the contents in this video to be useful, and subscribe if you'd like to continue to watch these videos. Thank you for your support. On the S&P 500, on this monthly chart, you can see the price dip into this retracement zone in March and then close back above this long-term trend line, this supporting trend line. But in the beginning of April, the price went back below this trend line, and right now we essentially want to see would it be able to hold above this retracement zone. In other words, hold above this 2351.91. And looking on the daily chart here, you can see that there is a potential resistance zone here between 2722 and 2641. So if the price is able to continue to bounce and come up, we want to see would it encounter resistance and push it back down. Then we will keep an eye on this 38.2, the 2351.91 level to see would it be able to hold this level. If it's not, then this is the key level to watch, this low here at 2191.86. We want to see would it be able to get a bounce off of that or close, even though if it go below that, to see would it get a nice bounce and see is that the low for this particular cycle. If it's not, then the 50% level will be critical, this 2030. So that's pretty much the outlook for the S&P 500. By the sentiment and the internal, it seems to indicate that there is a little bit more downside. So we probably see a pullback toward these 38.2 level here at 2351.91. And kind of keep an eye on that to see would it be able to find some support and bounces it off. Now, the other thing is, if we want to look for a bottom on this cycle, then we would like to see a new low and see would it be able to get below this 2191.86 and then get some of those, the new high, new low, and also get a positive on the advanced decline and also some positive on the sentiment with the put call ratio dipping below 1 and maybe into the 0.75 area and the VIX coming back down to the maybe lower 20 area. And that will give us much more confident that the market might have seen its low and put in a bottom and get ready for another round of upside move and possibly take out the all-time high. Gold had another volatile week. You can see this price action here from last week. It came down and sold off. Then it bounces back and closed with a gain for the week. So right now we're still monitoring gold to see would it be able to get back above this 1704.30. If it could get above this level here, then we're basically watching for it to make a move toward the 1850 area. But if it continue to fluctuate, we essentially have to watch this 1499.10. And that is the key level to watch for potential support, because we are basically looking at this retracement zone. And we want to make sure that it doesn't get below this 1435.70, the 50% retracement area. And if it get below this 50% retracement level, then we could possibly see it come down and retest the 1372.30. So right now, we're going to keep an eye on gold to see would it continue to make its move back up and retest this 1704.30 level, and see would it be able to move through it and make its move toward the 1850.40. And for the U.S. dollar was kind of interesting, because I was looking forward to pull back toward the trend line here and ultimately get back into the level somewhere around 95. As you can see right now, it's coming back up to this upper trend line of this particular price channel here. So I wouldn't be surprised to see it continue to move up. And if it breaks through this price channel, then we'll probably see it to come back up and retest this $102 area. So keep an eye on that. The dollar is still too strong. Here, looking at the oil, you see this oil in the oil market last week. It hit a low of 1927, and it got a nice bounce here and went back up to 28.34 here on Friday when it closed. And this is due to the mentioning by Trump that it said it will intervene with the Saudi and the Russian to try to resolve the dispute between production cut, because at the current price, nobody is going to be able to make money. So, and that prompted the oil to put in a nice rally. So I think the Russian and the Saudi, on their best interest, is they basically have to work out a deal on cutting that production to balance out the supply and the demand. So what I see is that for the price probably will come up to these areas and maybe just kind of bounce around here for a while. Certainly, as I doubt that it would go back up to $50 a barrel relative, anytime soon. So, but between the $30 area, that is maintainable. I wouldn't be surprised to see it traded for a substantial period of time, and that would certainly present some trading opportunity in terms of intraday as well as swing trade. So next, I'm going to go and show you a couple of the swing trade that I took last week. The first one is when I tweeted out. Here is the tweet that I put out on March 30th, and it is in the late hour in West Coast time, so that's probably in the middle of early morning, like 2:00 in the morning East Coast time, right? And I'm basically saying, looking at this price action here, saying that the swing trade off the recent low, with a potential target somewhere around 26 and 27. So if we take a look at the chart here, and essentially what I did is use this zone here as the trigger area, and once the price went above this zone, then one could go long, and with a stop down here at the low, because here's the that's 1917 low, right, or 1927. So essentially you put a stop right beneath this low, basically looking for a $26 to $27 level for a target. And essentially this is using this particular range here, and that is 1R, 2R, 3R. So if we get up to the 2730, then essentially it is the 2752. 2752. This right here is for the second trade, which I will go and describe later on after we finish with this one. So it's 2752. So essentially, I'm what I'm looking at is not necessarily come up to this 2752, but the target is somewhere around the 2627 area. So essentially, it's this area here, and you can see that it took a little heat, right? If you got in here, it took a little heat, but it's still above this low. Then all of a sudden, with Trump making that indication that it might intervene, then you can see that the oil just shot up and hit the target. So I exited out. So that's the first swing trade. And then the second one here is on this, this Fibonacci retracement I got here. And also I'm looking for that pullback. When it pull back here and then start forming a little bit of a base here. And that is my second trade that I took. And here's the tweet that I tweeted out on for the second trade here. That's on April the 3rd. And again, it's past midnight here in the West Coast, so it's basically 3 o'clock in the East Coast there. So I'm basically saying that with another possible swing trade, I'm just basically making a comment here, say where there is smoke, there will be fire, and there will be a deal to cut production. And that is my reflection on what Trump is trying to do, and what the Saudi and the Russian is sort of indicating that they would likely get together and try to work something out. And then here is the potential target this time is in the $30 area here. So let's go back and take a look at the chart here. And here is the trade that I'm looking at. So once it got basically into this zone here, and with a stop right beneath the 38.2, because if the price come back down and break below the 38.2, I'm not going to wait until to see would it be able to find some support down here, because that will be too much heat, and that basically is my my stop there. So you can see that it went up and got to pull back. We haven't got up to the $30 mark yet, and right now this is basically pretty much my my target here, somewhere around 29.43, anywhere between this area here, 127 and 141. So so those are the target area that I'm shooting at, and right now is getting close to this 29.40 area here, this 29.43. So we'll see, because right now this trade is profitable, so I'm tying up my stop, and if it come back to my trailing stop, then I'd be exit out. So not necessarily that I have to hit the target, but the target is somewhere around between this area here. So that's the oil swing trade that I took last week. And if you like this video and the content, give it a thumbs up, and also subscribe if you'd like to continue to watch these videos. Thank you very much, and good luck to you. And please stay safe and practice social distance. Keep yourself safe and keep everybody else safe.